Hi, I'm Steve Breen with Prosperian Financial Advisors. We create and communicate Prosperon videos like this to deliver timeless, valuable wisdom to our clients with the hope to provide you with greater clarity, capability, and confidence. In other words, we want to help people be better investors. We hope these are valuable to you as well as your family. Well, in August 2015, the financial markets seemed to do what nobody likes, but nearly everyone knows is normal. They corrected. A more accurate description of a market correction is when prices fall by 10% in a short period of time. That short-term decrease can cause panic or an attitude that investing is risky. Panic, driven by either buying or selling, can be a very poor strategy, and it's destined to cause investors to lose money. I believe emotion has moved to the forefront of public sentiment, prompted by a very loud media. This emotion, causing wild swings or wild volatility, results in frequent ups and downs that we've been experiencing recently. But let's consider what I believe to be the leading causes of these swings. And there are really three items. First, the August correction. Second, Chinese instability. And third, the possibility of a Fed rate hike. In the last weeks of August, the broad market decreased by 11%. And from the all-time peak in May of 2015, it actually declined 12.4%. Keep in mind, this is the first time in 4 years that equities have experienced a correction, or a decline of 10%. That's remarkable, given that since 1980, the market has experienced an average correction of 14% once a year. Nonetheless, corrections create panic, causing investors to second-guess their strategies. It's important to remember, corrections do happen. But they only become a cause for concern when they inspire a knee-jerk reaction that pulls investors off their plan. Long-term plans always account for corrections as a normal part of investing. The second, a slowing growth rate in China seems to be causing investors concern. It's important to remember that China is a communist country. Their growth rate is controlled and manipulated by their government. Furthermore, I think these government statistics are more fiction than accurate. These falsehoods may be starting to unravel as the world begins to wonder what is really under the emperor's robe. But consider this fact. America exports to China account for only 1% of our total exports. So if China is slowing, will that really have a big impact on our business? I think not. Rather, we are huge beneficiaries from Chinese imports. Think of all the goods that come from China, that say made in China. The lower the prices on these goods, the higher the standard of living for millions of Americans. Well, a third issue is what I call bird watching. You know, the Fed hawks and the Fed doves. Birds. Well, the current bird watch is the worry that the Fed is going to hike interest rates sometime this year or early next year. Could higher rates stall an economy, resulting in a declining stock market? Frankly, I think this whole issue is way overblown. We're talking about raising interest rates for the first time in 9 years by virtually an insignificant amount. I doubt this will have any long-term effect. Remember, stocks are companies. Stock prices are significantly more volatile than the enduring values of well-managed, well-financed companies that focus long-term. And the long-term is what I believe intelligent investors need to stay focused on. But that's boring. It doesn't sell newspapers or fill TV time. According to a recent study published by Business Insider in August of this year, and it's highlighted in this chart, investors tend to significantly underperform the markets when they react or use emotion as their strategy. This get me to safety strategy doesn't do investors any good. So in moments of stress, don't let emotions cloud your long-term perspective. When the negative gets overwhelming, remember you're invested in successful, well-managed, well-financed, profitable, dividend-paying companies that every day are out working hard to sell essential goods and services to people like you and me. The rest is noise, just noise. So remember, if you're concerned, give us a call. We can't make the markets go up, but we can provide you with valuable perspective and insight on your portfolio. Thank you for being a client of Prosperian Financial Advisors. I'm Steve Breen.